It is no secret, being in the crypto space, we are exposed to price predictions basically every single day, even ones from myself. But there are a few instances that we get where we have predictions from extremely reputable names and also institutions that ultimately just give more weight, right? We trust what they say a lot more because they have swoots of people, teams and teams of not just crypto experts, actual market analysis in the real world, but also technology experts as well. So of course we look at that, what they say, as more valuable, a bit of insights basically. And in this case, we are lucky because we have 15 crypto predictions for 2024, but they aren't just crypto macro market predictions, and they aren't just Bitcoin predictions. Crazily enough, and this is why I'm really interested in you guys coming on and listening to this video, these are 15 predictions for top 100 altcoins by name. So you might hold some of these altcoins, chances are you at least hold one of them. So I think you guys have to pay attention because the particular institution in question here, Van Eck, these guys have $100 billion in assets under management worldwide right now, specifically say this altcoin, rank number say 54 right now, we expect it to go to at least top 25. So you got to pay attention, and all I ask for is two things. Like the video if you enjoy the content at any stage during this presentation, and number two, tell me down below what you think, if they're going to come true or not. So starting off, this report was actually produced back on December 7th of this year, 15 crypto predictions for 2024. This report just goes on and on and on, and I'm not going to let you guys and walk you all through this. I want to take you through the cliff notes and give you the exact information you actually need to know. Now, you might have heard of Van Eck by now because, again, these guys were one of the 13 spot Bitcoin ETF issuers out there, but they hold a distinct difference because these guys actually are calling their ticker HODL. Now, most other institutions out there are calling it whatever their name is, BTC. For Fidelity, it's Fidelity BTC, so on and so forth. Well, FBTC is a bit of an interesting ticker, but either way, they've decided to go with HODL, which, and I know this might seem a little bit surface level, maybe a bit overthinking it, but a lot of analysts, not just my opinion, analysts have come out and actually said, this shows more than what it actually does, right? It means more. Basically, having their ticker HODL, these guys obviously have a pretty keen eye on the crypto markets. The fact that they're calling it HODL, not, VBTC or VEBTC, goes to show that they obviously understand the crypto lingo and so on and so forth. So I found that quite interesting to share as well. Now, let's get into the first point of conversation, which of course is going to impact Q1 of 2024. So what they're saying here is that after a couple of days of the Bitcoin ETFs being approved, we'll see inflows of around $1 billion. And over the first quarter, we'll see inflows of about $2.4 billion. And then over the next 2 years, right up into the commencement or the finalization of the bull run, we'll see a total inflow over the next 2 years of $40 billion, which actually isn't a lot. And this has put me into perspective. I had thought, hey, Bitcoin might wick up, hit an all-time high, come back down, at least hit $50,000 because of this. But in reality, I'm far from that, right? And I believe that possibly we're going to see some retail and institutional money come in. But for the most part, it's going to fizzle off pretty quickly. And in this case, I think it's going to actually scare people and then cause a bit of a correction, okay? Now, part of the reason, and some bullish features I guess they're saying in this case, is that Bitcoin won't actually drop lower than $30,000. So if we go to $30,000 from right now, that's about a 28% drop, but they think the ETFs will actually prevent it from falling any lower. So again, that'll bring it back down to about 30% dip here. And part of the reasons why they come up with these very accurate predictions is all based off gold, and a gold ETF that was approved way back in the early 2000s, and kind of the inflows that occurred from that. And they've extrapolated the data from that, of course, forecasted it from those prices in US dollars to, of course, the new costs based on inflation. And they've indicated over here that we've had a recent increase in the price of gold, of course, a slight correction right now, but this typically means that people are after hard money, right, escaping the dollar. And in this case, we typically see a recession forming around gold and hard money collapsing, right, and falling, because people, of course, taking their profits out to pretty much live, essentially, right? And so when we see gold start to form these lower movements, I guess you could say, these sharp decreases, we can expect that it's likely a looming recession. And they've also pointed out that the media is pushing the term, soft landing more and more. And while that might seem crazy to you and me, they've actually gone ahead and said in the past that this often leads to a looming recession, okay? So what they're essentially saying here is there is something coming in the first quarter, maybe the first half of 2024, and the ETFs may be impacted in some way, shape, or form, or at least impact the performance of Bitcoin to what we actually expect. They go on to mention Bitcoin has only really seen one true recession, which was about January to April 2020, in which it fell about 20%. You couldn't basically said it was also COVID as well, but either way, they do mention that if this is kind of, confirmed in the early parts of 2024, we may see some negative movements for Bitcoin. And I do think pair that with the fact that the ETFs won't be this amazing wow factor like people think, there could be some downwards movement there, okay? Now, the next prediction comes in the way of the Bitcoin halving, not having a sort of sideways or downwards movement like we typically see immediately after. Now, as you can see here on this chart, the green represents the last 2017 cycle and blue is the 2013 cycle. And technically we are still in the 2021 cycle, right? We are about here right now. And what typically happens after a halving is the fact that we move sideways, or in this case, previously downwards, okay? And we do that because the miners actually become a lot harder to make any money, right? So what happens is after a halving, the Bitcoin block reward, the money that they get is halved, but there's no immediate price increase, right? Price doesn't double to therefore make that a worthwhile trade-off, okay? This takes time for Bitcoin to go higher and higher. So what happens is these mining firms that have, I guess, less profitable years are, stuck with basically having to sell their Bitcoin or shut off for a period of time. This, of course, causes downward price movement, but Van Eck has actually assessed the market and says that we are seeing more profitable mining firms right now, healthier balance sheets, so we won't really see this massive stoop in price as we've seen before. It's likely to just basically move sideways, if not slightly down, for a few days or a few weeks. There really isn't a big scare. On the bullish side, they do say a few months after the halving, they expect Bitcoin to reach about $48,000. At number 3, they claim that Bitcoin will reach a new all-time high in Q4 of next year, exactly to the day 3 years after its previous all-time high back here on November 9th in 2021. So they're predicting exactly on November 9th, Bitcoin reaches its new all-time high, which will mean that it'll have to reach a price of, again, about $69,000. This, of course, is the global market cap, but you can safely say it'll include Bitcoin as well. And then they even go ahead and say Bitcoin will actually possibly reach $100,000 in December. So 1 month after, basically, it's going to be insane. A very bullish end of 2024 indeed. They've even gone ahead and actually said that Satoshi Nakamoto might be mentioned as Time Magazine's now called Person of the Year, which is interesting. I put up Donald Trump's picture here because what they've said is the reason for all of this is that they predict Donald Trump will win the 2024 US presidential election, and in doing so will kind of stop all this, I guess, bad behavior the SEC has had in regards to crypto, right? This sort of watchdog hostility, and he will ease it, allowing Bitcoin to flourish. And of course, Satoshi Nakamoto being named Man of the Year is going to be quite interesting as well. At number 4, and this one I definitely agree with, Ethereum will not flip Bitcoin at any point in 2024. So Ethereum will fail to flip Bitcoin, but will perform better than every mega cap stock on the stock market. Bitcoin will actually remain on top, but at least for 2024, as there are even more countries teetering on the cusp of actually mining Bitcoin on the state level. Now, Bitcoin's going to lead the market to rally, at least what these guys predict, and of course, I would definitely get behind that. And the value from there will fall into smaller tokens just after the halving. And actually what they've gone ahead and said here is that ETH won't actually begin outperforming Bitcoin until post-halving and may even outperform it for the year. But of course, as they said, there's going to be no flipping. Now, as you can see on the chart over here, Ethereum has actually been outperforming Bitcoin basically for a good part of even the last couple of years, which is quite interesting as well. Now, despite a strong performance in 2024, at least forecast for Ethereum, again, Ethereum will actually lose its market share here to other smart contract platforms with less uncertainty surrounding their scalability roadmap. Now, they've gone ahead and actually mentioned Solana in this case, and I believe this will also go ahead and benefit the likes of Near Protocol and others, again, that have a very clear guide to their scalability approach. Number 5, they predict that Ethereum Layer 2s will actually capture most of the demand and TVL from the entire EVM-compatible market, including other chains as well. Now, this is because exactly 1 year, they believe, after Ethereum's upgrade to proto-dank sharding, which is basically just allowing the network to be a lot more scalable and cheaper, that these layer 2s will really begin to shine, but actually consolidate into 2 projects. Now, their bets, and I'll show you in a second here, are Arbitrum and Optimism, just because they're outperforming all other layer 2s, but they believe that because of fragmentation of liquidity, even on other EVM networks, most people will decide to come onto these layer 2s because, again, they're even faster and cheaper thanks to Ethereum's upgrade, and again, use them, have more TVL with them, and of course decide to use the actual ecosystem a lot more. They've gone ahead and said actually as well, one of these layer 2s will have more monthly DEX volume than Ethereum as well. So a lot of, growth happening here for layer 2s. As you can see this chart right here, ETH is still in charge, Matic, Arbitrum, Optimism, they're all growing as you can see over here. But more interestingly, this right here is the chart of TVL for Ethereum, obviously in charge over here in the red. You can't quite see the others, but if we actually zoom in, they are increasing, right? And I think, of course, as time progresses, it will move to the layer 2s. So in charge right now, believe it or not, is Arbitrum at 2 billion. Next is Polygon, but very close behind that is Optimism, and Optimism is most definitely gaining on Polygon. So again, that's their picks, and with pretty good reason too. So if you're someone, of course, holding those two tokens, well, you're likely in for a pretty good bull run. Number 6, they believe NFTs will reach a new all-time high global market cap wise, and I definitely do agree with them. They believe that as more speculators come back into the market, it's of course going to grow, but it's mainly due to the thanks of new games, new NFTs, new functionality for NFTs, and also because of Bitcoin ordinals. Yes, the chart right now on Google Trends isn't looking too hot, but again, we're 2 years out, basically the same scores that we were 1 year out of the bull run. So again, a lot of growth still to happen, and it's looking quite good. Now, again, I mentioned Bitcoin ordinals. Right now, it's actually increased in terms of total value than Ethereum NFTs, okay? It's surpassing, okay, in green, which is quite interesting. And this is going to bring a whole new aspect to NFTs as well. And Bitcoin layer 2s being functional and offering things like ordinals, and again, basically any sort of smart contract for Bitcoin, including NFTs, will really prosper. They've actually gone ahead and mentioned by name Stacks, ticker XTX, will be inside the top 30 altcoin list, currently ranked number 53. So at a 1 billion market cap right now, it's going to have to at least get to 10, 20, 30 billion by the time the bull run really kicks off. So again, if you're a Stacks holder, these guys predict, of course, being a layer 2 for Bitcoin, offering NFTs and things like that, it's going to be quite big. Number 7, they believe that Bitcoin will be dethroned from the number 1 crypto exchange on the market, and I believe for pretty good reason. They've recently had to pay $4.3 billion for money laundering, and of course, CZ, the founder of Binance, has had to step away from the leadership position. He might even be indicted. So this is some pretty big news, of course, and they believe that it'll be surpassed by the likes of OKX, BitGet, so on and so forth, especially Coinbase as well, they mentioned. Now, Coinbase, they also predict will have a futures, total trading volume of $1 billion per day, which will be about a 5x increase from its current $200 million futures market today. So some pretty big upsets, and again, I think that's got some pretty big merit behind it. So if you're kind of someone believing in Base, the layer 2 made by Coinbase, having any sort of token, well, I think that's even a more bullish reason to buy it. Not financial advice, of course. And number 8, the stablecoin market will reach a new all-time high, and USDT will be dethroned by USDC. Now, USDC is apparently preferred by newer layer 2 chains on Ethereum, and it's going to be a bit of an upset, right? They predict the market to go from about $129 billion right up to about $200 billion just in next year as well, which is, again, pretty big increase for just even 12 months before the real kickoff of the bull run. Now, part of the reason why they actually believe that it will reach a new all-time high is because MiCA will be introduced, which is Markets and Crypto Asset Regulation over in the EU, issuing new stablecoin assets. And they believe the dethrone of USDT will happen from USDC because Justin Sun and Tether and all of this sort of big issues with the Department of Justice over in the US, and that they were actually financing a lot of terror and ultimately just market manipulation. If you don't know, Justin Sun and Tron have some sort of weird partnership or at least intertwinings with USDT or Tether. And so they believe this will be part of the catalyst, and it wouldn't really surprise me either. So of course, if you're someone like myself holding USDT more than USDC, well, it might be a wise decision to flip. Of course, not financial advice, but I'm definitely taking this on board. They also believe that the DEX market share of total spot trading will have a large uptick as well, because fast chains with high throughput like Solana and Near Protocol, of course, are going to have better UIs, better interfaces, and overall have more improved services, right? Solana, for one, has private transactions now. So this is going to bring more people into crypto using non-custodial wallets. And of course, more, deep liquidity pools in these decentralized exchanges as well. Now, they've actually come out here and said that a lot of these DEXs offering, and also launch pads, offering launch pads, of course, are going to really shine through, because these offer tokens earlier on in their life cycle, meaning people, and this is a big part of my strategy now, are going to be buying launch pads, or again, DEXs that offer launch pad services in order to get on these tokens a lot cheaper. Again, thanks to the fact that they are now on these exchanges and using non-custodial wallets more frequently. So if you're me and you're someone looking to buy a CeDeFi, a REST fund, Poker Startup, BSC pad, so on and so forth, you may want to get in pretty quickly, because it might not be very feasible later on next year. At number 10, they believe that there's going to be a new wave of Bitcoin staking that's going to be really pushed out there, and a lot of people are going to start using platforms that offer Bitcoin staking. Now, there currently is a way in which you can do that. Stream, for example, is a Lightning Network-based project that you can stake and create your own node to then stake your Bitcoin. However, it's very complex, it can be quite dangerous and unsecure, and there's low rewards. They see projects like this one over here, Babylon, built on Cosmos, being the really true unlock here, able to stake your Bitcoin at higher yield, of course, bringing in more people. Now, of course, with ordinals and things like that actually coming out, they believe the higher transaction fees are going to push more people to want to stake their Bitcoin, so they're not really wasting any, if that makes sense. And in this case, all you have to do is basically stake to proof of stake networks, and then you could actually receive Bitcoin back annually or passively, which is pretty interesting for a lot higher yield. So they think that Bitcoin Maxi is going to go out there and push this to people, because again, it just makes more sense, especially with the higher network fees. Now, for all you gaming freaks out there, and I'm becoming one myself, number 11 is that there's going to be one breakout crypto game that's going to surpass 1 million daily active users. Now, they suspect a few different projects, but the number one they suspect here that's going to happen is Mutable X. Mutable X is a layer 2 on Ethereum, of course, and these guys, they predict to go within the top 25 by market cap. Now, it's already becoming a reality. Number 29, they predicted back when it was number 43. So I would even go as far as to say top 15, if not more, based on their ratio predictions here. That's because Immutable X is coming out with some really awesome games. Of course, first and foremost, Illuvium. This is built, of course, as I said, on Immutable X, Guild of Guardians, so on and so forth. They actually have mentioned as well that Illuvium is a standout game as well, likely to do extremely well. Now, why? Well, for a few good reasons. First of all, these games aren't farmable from bots, which is a very big issue. You have to play the game to get the token. And also, Mutable X actually has solved a very big problem in crypto gaming, which is a fragmentation of crypto wallets. You're having to create a new wallet for every game. Well, in this case, they created a passport which you can sync all your games up with and have it all in one place. Now, games like this have received many years of development and hundreds of $1 million in funding, so that's part of the reason why they're even more bullish again on the likes of Illuvium, and particularly in this case, Immutable X as a whole. Now, the gaming market has also increased. This was one of the charts they shared. Currently about 2 billion global market cap, basically reached 8 billion in total from the last bull run, but the fact that we're already here 2 years out is basically over here, right? So we expect this to go in the multi-billions, if not, some people even saying trillions. Now, the only real competitor and version we can say in this case is a project built on a blockchain called Wax, which is Alien Worlds. These guys have about 150,000 odd daily active users, but they've actually come out and said that most of these are bots because you can farm the token with bots. So again, the standout game here will likely be something like Illuvium or just Immutable X in general. At number 12, they've said something absolutely crazy, and that Solana will continue to outperform Ethereum and being the number one competitor to Ethereum in the next bull market, which again aligns with a lot of other experts' predictions as well. They've said Solana will become a top 3 blockchain by market cap, total value locked, and active users. Yes, that's number 3 on the CoinMarketCap rankings. Now, fueled by this rise, they've said Solana will join a spot ETF war. Again, that's happening right now with Bitcoin and Ethereum because a lot of asset managers will begin filing them. And since they are an ETF fund themselves, right, they manage a lot of ETFs, this is basically insider information here, so it wouldn't surprise me if that came to life. Now, they've also come out and said a really crazy bullish thing here for one of the Solana-based projects, and that is a project called Pyth. And they said that Pyth, which is an Oracle service strictly for Solana, will actually flip Chainlink in terms of total value secured. Now, apparently Chainlink's total value secured is about $15 billion. Pyth's about $2 billion. Pyth's a very new project I'm actually personally looking at to get into myself, and it will flip it at some point, or at least be very possible to flip it in the next bull run, basically because, and they've kind of pinned this on Chainlink's difficulty at actually finding institutional adoption. Now, with Solana's TVL increasing, and it by far is not the number 2 TVL-based ecosystem behind Ethereum right now. I think it's like number 6. We've seen a few projects built on this as well, which I'm really bullish on. Marinade Finance with a $700 million in TVL right now, actually being only $95 million market cap. So this is one I'm really bullish on myself. And of course, Pyth Network or Pyth Network being a big contender as well for my personal bag. Now, here's what I found really interesting. At number 13, they predict that DePIN narrative, or essentially decentralized physical infrastructure projects, are going to have a massive surge, and they mentioned 2 Solana-based projects today. So again, decentralized physical infrastructure, or DePIN, is going to have a massive run. It's not one that's been on my radar, and they mentioned the likes of 2 projects here. One, Hive Mapper. These guys have actually mapped their 6 millionth unique kilometer, which is pretty insane considering the likes of Google Maps is expected to have about $11 billion worth of revenue. So if this takes off, it's going to absolutely be massive for revenue. And over here also, of course, Helium Network, the sort of cellular-based network that offers, hotspots in a decentralized way. Now, these guys are actually expanding quite well. You can see all the locations over here worldwide. Australia needs a bit of love, I think. But ultimately, these guys are offering 50% discount on essentially the cellular network. It's 5G, by the way, versus other legacy networks as well. So if this takes off, and there's a good chance with adoption it can, these could really take off in the next bull run, and most definitely beyond as well. Number 14, there is expected to be some changes or legislation implemented in the US that will allow some big players to begin creating their own networks, which may offer semi-public, layer 2 chains on Ethereum. Now, of course, we've seen Base, and that happens, of course, over there with Coinbase. And that's kind of been the reason why this has kicked off, okay? So we might see, for example, as you can see here, JP Morgan or the JPM coin being created, but rather it being a sort of permissioned private network only strictly for JPM customers, it might actually again be bridged to the likes of Ethereum, or again a layer 2 on Ethereum, which will allow us to get involved with some pretty big institutional money. So again, this has kind of been built from the, implementation of Base from Coinbase. And last but definitely not least, they see DeFi reconciling or at least adopting KYC measures, and they've come in and said strictly here Uniswap. So Uniswap, for those who don't know, is looking to implement something called Uniswap hooks, which, moral of the story in very plain English terms, just allows institutional clients to come in thanks to KYC, which of course brings bigger money in, larger transactions basically, more fees, which will of course create demand for the Uni token itself. And in addition to that, they do believe that these KYC DEXs will actually have more volume and TVL and overall interest than non-KYC DEXs, which is a little bit interesting as well. It's kind of crazy how we're merging slightly into a more centralized, decentralized market. And they also do predict as well that Uniswap will increase its price over the next 12 months, thanks to the fact that the DAO might actually approve Uniswap's improved fee structure, which of course will drive more demand back to the Uni token itself. Again, it's always talking about positive price action here. So big news possibly on the line here for Uniswap. Again, the main DEX leading the pack here, which again is something that you probably want to invest in if you are someone leaning into DeFi and DEXs. So guys, with that being said, that's going to cover today's video. 15 insane predictions coming from one of the largest asset managers in the world, Van Eck. If you've enjoyed the video and made it this far, I would love for all the hard work if you just smash the like button. And with that being said, I look forward to seeing you all tomorrow. Take good care.